What is good, Tsla family? It's Ray J back with another video. And in this one, I want to break down what's going on with the overall market, what's going on with Tesla stock, and why tomorrow is going to be an absolutely massive day as we have CPI coming out. I'm going to break down what the expectations are for CPI and how this may affect the markets, what's going on with SPY, SPX, Tesla, and all these other tickers as well, and break down some important things to know for tomorrow. Before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I'm firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends in just about 6 days, so check it out before they run out. With that out of the way, let's get on with the video. Tesla was down 3% for the day, getting a very, very nice drop to the downside. And this is once again something very healthy that could happen to many different stocks. But in the morning, okay, and this is the thing you have to remember, in the morning, Tesla got this gap to the upside and this failed to last. And because Tesla failed to hold these levels, it is looking a lot more bearish. However, we can't really lean in either direction, at least for now, when it comes to what's going to happen for tomorrow, because that's going to be a completely new day based off the data that comes out, and that could push the market in either direction. So I'm going to break down what the directions may be for Tesla and SPY. But first, let's talk about the numbers and some earnings. So we still have Disney's earnings coming out at the time I'm recording this. And then for tomorrow, we have like Alibaba and a couple of others. Nothing too major for earnings for the majority of the week. But the bigger thing that's going to be coming out for tomorrow is going to be CPI. Now, it's going to be coming out 1 hour before the market opens. We also have initial jobless claims coming out. It's not going to be as significant, but it's worth noting. But CPI is going to be so huge once again at about 8:30 a.m. New York time. The market is going to either gap up or gap down most likely and make a very, very big move as there's lots of eyes on this report. You see, a lot of these economists out there are saying that CPI is going to go up. It's going to be very, very hot. And that's a real risk right now. Looking at the forecast, you have to remember that overall, most banks that are expecting a 3.3% increase in CPI for the month of July, and this was 3% in June. So this is actually an increase in CPI. You can see right here we have the headline CPI from like Bank of America, Barclays, Citigroup, and the list goes on. Most of them are expecting around 3.3%. That's like what the average happens to be. And that's what the main headline happens to be. That's what we're expecting. For core, we're expecting 4.7%, a little bit lower than what we saw in June, and we will see if we get something like this. Now, it's worth noting that I know these numbers are kind of small, but looking at the overall July data, the gas prices did go up by about 3 to 5 cents. I'd say about almost 5 cents, depending on where you're looking at. And seeing these numbers going up is not the best of signs. This could lead to the overall CPI being a little bit harder than what we're expecting. And if that's the case, it's not going to be that great. So, how could this affect the markets? That's going to be the bigger question. How on earth may SPY end up moving? Well, it depends on the reports. If we get, for example, okay, if CPI or core CPI is at about 4.8% or higher, and overall CPI, the headline CPI is around like 3.4% or higher, we're going to see the market get a rug pull, and we're going to be seeing SPY drop all the way down to 442, and this will be correlated with Tesla coming down into the 230s. So I'm going to break down Tesla in just a few minutes, but we have to talk about this because this is a very important setup. But what if that overall numbers are as expected or lower than expected, right? I would say lower than expected is what would be a lot more ideal. If you get like a 4.6% core CPI and like CPI, the headline CPI is like 3.2% or like 3.3% even, we could still see the market get, a break out of this falling wedge and start pushing to the upside, gap up very nicely and see a monstrous squeeze because everyone is expecting the market to like crash. A lot of people are expecting it. So it could be a big surprise as well. You never know, right? Now, which way am I leaning in? And my answer to that is I don't really know. I have no real way of telling you exactly how it's going to go. So you have to be prepared for either of them equally. There's a chance the market's going to tank. We're going to see SPY crash to a lower number. I don't think it's going to be a literal crash. By the way, I know I just used that term, but that's just like me speaking in slang. The market is not going to crash, in my opinion, to like October lows or anything like that. I don't really see that right now unless we get some very, very bad piece of news, something historic or something detrimental. So far, it has not happened, so I'm not really counting on like a massive crash like that. I do believe the market's in a healthy pullback phase, but for this specific day, Things could change big time depending on CPI, and we'll have to wait and see on this. Now, looking at the data right now, we did see futures sell off as Wall Street is inching lower as we're seeing investors waiting for the inflationary data. And then there's this news right here. I'm going to talk about this a little bit later, but for Tesla in particular, looking at some important technicals, we can see that Morgan Stanley is giving Tesla an equal weight rating. There's nothing much else going on. The price price ratio is coming down. So Tesla's looking weaker than before. And finally, the short interest is starting to go up again. More shorts are piling into Tesla in the markets. They're getting excited. They're becoming a lot more bearish. And the volume on Tesla, unfortunately, went up by over 11 million compared to yesterday. 101 million was the volume. So we're dropping on a higher volume than before, which is another bearish signal. However, I just wanted to call these things out because things are looking a little bit more bearish for the market in general. But just to be safe, that's not everything because there is a falling wedge on SPY. There's also a bullish divergence developing, but there are no guarantees with technicals. Technicals are just only a part of the equation. They're just a small slice of the pie. The bigger slice is just going to be the data and the reaction from that. So even if we have these bullish setups, even if we have bearish setups, it does not matter. What matters will be the data, and that is basically it. It's that simple. Okay. So just to be clear, I'm going to use the words good data and bad data. I'm going to be referring to these CPI numbers. Good data is referring to everything coming out, lower than expected. If we get things higher than expected, that's going to be bad data, right? And let me also note that there could be mixed data as well, where, for example, we have like a really hot core CPI and a very low CPI in totality. I'm not too sure about that happening, but I'm just saying. Or what if CPI is hot and core is like a little bit lower? There could also be like gaps to the upside in a drop or a gap down in a push. I mean, we'll have to see how we open in the morning. It could go all over the place, but it's unlikely it's going to happen. It seems more probable the market's just going to pick a direction, in my opinion, either drop down to a particular level or just try to like gap and go. It's got to be one of those two. So be prepared for anything. It's going to be very wild. So now let's break down some levels on Tesla and SPY. Here's the thing about Tesla, okay? On the daily chart, okay? Tesla has this unfilled gap down here, all the way down into the 235 area. If we get a really bad CPI, if the numbers are too hot, the market could get a rug pull and Tesla's going to be well on its way into the 230s for 235, if not lower than that. Then 221 becomes a possibility too, as we have our 200 EMA right over there. The current trend looks more bearish if you look at it. It's looking a little bit weak. But I also want to add that on the 4-hour time frame for Tesla, we have a bullish divergence that developed. I think it's on the 4 hour. It's actually on the 30 minutes time frame. Actually, the 30-minute time frame is actually the one that shows that there is this bullish divergence right here on the 30 minutes, and there's a chance that there's still some hope that Tesla could try to do something unpredictable and still bounce. So either way, there are some technicals suggesting either way, right? The daily looks weak, the 30-minute looks like a bounce is possible. I'm once again in the middle. And here's what you need to know. If we get good numbers, okay, if we get a really, really good CPI and things are very, very bullish, we could see Tesla push for 250 plus and then potentially 255 plus. If we get a bad CPI and things are hotter than expected and the market freaks out, I'm expecting Tesla to come all the way down to 235 or lower. It's going to be a very bad to witness for a lot of the bulls out there, but this is just what happens when we see this stock on such a big decline, and CPI is very, very impactful for the entire markets. So we have to be prepared for anything. It could go either way. The current technicals are looking, I would say there's some that are looking kind of like bullish, other ones are looking kind of bearish. We actually do have a bullish divergence technically on the 4-hour time frame as well. I kind of missed that for a second. So we do have some bullish signals on Tesla, also some bearish ones. It's all over the place, and I'm in the middle right now. Be prepared for anything. For SPY, if we get a bullish CPI, we're going to be watching this thing push all the way up to 450 plus, and it's going to try to break to 452. If we get a bearish CPI and the market gets a rug pull, we're going to be expecting SPY to come all the way down to 442 or lower. That's where we have that unfilled gap. I'm going to be expecting 442 or lower if we get a bad CPI, or even lower numbers than that, like 440. All right. So for something else such as Aapl, a good CPI is going to launch this thing up to about 182 in my opinion, all the way up here to get a bounce. It also has, this really, really nice divergence that's forming. So that's a possibility. If we get a bad CPI, it's going to come down to fill the gap around 175 and then potentially come down to lower levels such as 170. This previous resistance, which is going to become support around like 176, 175, and then 170 are going to be our targets. If we get a bad number, we could see Apple tank pretty hard if things are bad. If it's a good CPI, we could see a bounce. There is a bullish divergence, so that is possible. We'll have to wait and see just to be safe. Technicals are only part of the solution. For the triple Q, good CPI numbers, this thing's going to go up to 375. Bad CPI numbers, this thing is going to get a rug pull all the way down to potentially 360. If not there's 363, 360, and 357, somewhere between here. I would say 363 first. If not, then 360, then 357. One of those two will most likely be tested between like 360 and 357. It's very probable big downside could come, but it's also a possibility that the opposite could happen because we do have on the 4-hour time frame a bullish divergence on the QQQ also developing. So it's very mixed. The technicals are mixed. It could go either way. We could see a nice pump to the upside or a big rug pull. We have some bullish and bearish signals. So, like I said before, it's all over the place. Watch for the data just to be safe. For Nvidia stock, okay, there is technically, let me just double check this just to be safe. There is technically a bullish divergence on it, which suggests that, a bounce is what could be expected from a technical standpoint. But the problem is, like I said before, CPI is so unpredictable. We can't really count on that. So if we're bullish, we could see Nvidia make its way up to this previous support, which is going to become resistance around this 437 area and then potentially 440. We could see that if we get a very, very bullish CPI. If we get a bearish CPI, if it's bad numbers, things are not good, Nvidia is going to come crashing down to about I'm going to be watching like 413 or so into 410. That's going to become a real possibility, or even lower numbers. Now, either one of those possibilities is probable, but just to be safe, we have to be open-minded. We have to watch for both sides, and we have to watch for what the numbers tell us just to give us a sense of direction. Always be prepared for anything. We could get a surprise and we could see the market bounce, or it may not happen. So always try to be open-minded. For Microsoft, the bulls want to see this thing go all the way up to about 330. The bears want to see it come all the way down to about, let's see where this target was. I was double checking this and I saw this potential target down here around this 312 area. We have this imbalance down here, so that could come a really big rug pull to the downside if you get a bad number. So be prepared for that. For AMD, the bulls want to see this thing push all the way up to about 113. The bears want to see it break below 107 to 105. Watch for either move. The dollar is at 102.5. If we get a hot CPI, we could see the dollar push up to about 102.8, then potentially 103. If that's the case, that's going to be bearish for the markets. If the dollar ends up breaking down with a decent CPI, right, we could see this thing come down to 102, which would be bullish. We'll have to wait and see on that. For Coinbase, we're watching support right now. If it breaks down off a bad CPI, this thing could break all the way down to this next imbalance around 79. If the opposite happens and we get a bounce, we're going to be watching it come all the way back up to 90. It could go either way. We're still in the middle. For Google, and don't forget Alibaba has earnings. Good CPI and good earnings could push this thing up to about 100 plus. And we can also fill this gap to like 100. There's also another gap up to about 102. So 100, 102 are possibilities. Bad pieces of earnings and CPI could drag this thing all the way down to about 92 flats. We also have this gap down here around like 83. So I'm going to be watching this thing come down to potentially this level right here that I'm eyeing right here. So about this 90 level, then potentially 85 to 83 become possibilities if that breaks. Depends on earnings and CPI. For Google, if we're bullish, we want to see this thing push up to about 132.5. We also have this unfilled gap up here around 133. If we're bearish, we want to see this thing get rug pulled down to 127. If that fails us, it could come all the way down to potentially 123. I'm in the middle with this, so make sure you're open-minded. It could go either way, so don't forget about that. For the 10-year Treasury yield, if we get a good CPI, this thing could actually start dropping down below 39. That's going to be bullish for the markets. If we're bearish, this thing is going to bounce and start pushing for 41 plus, which could help the market drop. It really depends on CPI. For Amazon, good numbers are going to push this thing up to about 141, very close to 141.8, very close to like right about here, then almost 142. Bad numbers are going to cause Amazon to drop right here. So we had this previous resistance, which is going to become support around 134. We could see a rug pull on Amazon if we get some bad numbers. For Meta, good CPI numbers will push this thing up to about, in my opinion, at least 312 again, if not 318. And bad numbers are going to drag this thing all the way down to some other important levels, such as 290. That's going to be another one to watch for. I think I saw this on the 4-hour time frame. Let me just double check this. So basically, 290 is going to be our next target if this thing does break down. We actually have support right about there in the demand zone. 290, if we get bad numbers, it's going to be on its way down there. And if we get good numbers, it's going to be pushing for an attempt to get back to at least 312 and then potentially 316. We'll have to wait and see on that. And with that said, I really can't predict the numbers. I don't know for sure what they're going to be. So the best thing to do is just to be as open minded as possible and wait and see what they tell us. All right, guys, so get ready for tomorrow. The numbers are going to be coming out 1 hour before the market opens. Remain calm, cool, and collected. Do what you have to do, and we will see in the morning. So thank you for listening, but get ready for some big volatility. A huge, huge, huge day for tomorrow that can affect the market for many days, if not for the remainder of the week. I'll see you guys in the next one. Thank you. Market to the moon as long term is still incredibly bright, and peace out.